Hi all, this is Z. It is after hours on the 24th of March, and it's Tuesday. This was the first chart that we posted in the morning. First thing I look for is evidence of support, see which charts are in play. Normally, you have to get by the middle blue line, which is called the mid-uni, and we need to break that on one chart before we can think about getting to it on another. So 15-minute look, and looking at the 60s over and under the day before, the 120s first time coming back into that blue line, so that's in play early until broken. Daily chart, note the red line in the middle right here. We still got a lot of air to come back to that mid-uni, and the 240 at the time catches my eye, but not enough to worry about that until we break this and start lower. And obviously the NQ 120 in play at the time. And the 120 chart was posted, the 20-minute chart was posted early. 15 had already rotated to the 20. We looked at 15 to 20, then we looked back to 30s and 60s and whatever. This was a break right here, this neckline break in the 04, 03 area, and that was today's resistance that we had. We thought even if we busted later in the day, busted that 01 area, that the 4 would contain it. So that was our key resistance for the day. We felt the primary morning trade should be to range trade this breakdown from late day if we took out the prior day's low from 94 to 92, then any low is available, and 87 was a support target, which we thought would hold this morning. And in fact, no idea whether it would hold the rest of the day or not. Got a push into the lunchtime highs into this 21 double top test. Seemed to have problems there. We thought at the time if it could climb up a point or two higher than the breakdown, no big deal. We would still try another short. But assume at that point, if we got that much higher, that probably the low was in. As luck would have it, obviously the one hold held right here at just prior to lunch, and we got a contra coming back in against this morning push. So this was a great fake as it turned out today at the time, and truthfully nobody knows until hindsight where the real resistance and support is. We guessed be done by 21. That was our call, to make sure it done 99 to 21. We just thought that was the right resistance zone to come back and perhaps take out the low. If we did, any low would be available, and range trade the 90s was the base call until proven otherwise. As posted, we felt this was the right area to be done. I'm fairly conservative. I thought that would be our resistance zone, and with no guarantee of taking out the lows, but just if you were alongside, you had a nice trade, needed a contra, needed a pullback to test support. And at that time, the magnet was 98.75. Our measures showed 87 as a potential target. Another potential target will be to close the gap. We felt that if we got past 87, 87 and a half, done well, and gravy below. 85 seems to be a neighborhood that the boys fight over all the time, and we called 82 support, 82 to 85 as the target zone. And once past the 87, 86 and a half targets, the rest of it was gravy. Truthfully, this look is a look at if we hold this red and green line and get above the blue line, then this can go again. But in the meantime, once we slip back under it, then we have what we call the umbrella trade, and you can just see how powerful that is once it kicks in. We like the look of the 10-minute RTH chart, and in fact that was perfect. This was the chart that convinced us to hit one more time. This was the platform that got broke late day. These traders were still trapped, and we felt by stalling here, even if we went up a point or two, we could still come back through and target that 87 zone and below. And you can see on a 15-minute basis, this also came true. where once we stayed underneath this blue line and started backwards, we still don't have an umbrella trade basis this chart because we're above the pink line and we're below the blue line. So this will be tomorrow's battle shaping up already. We noted that we had assumed 92 support until broken. Got that broken, and then once we took it out in this subsequent rotation, then that became our resistance zone. We felt that 92 to 93 should be our resistance, and looking south side for new targets to auction off this territory that really on last week on Friday had been neglected. So the market will tend to fill these voids. The question is when and where. We thought it was a Taylor day 3 sequence where this would be a buy day, and yesterday would be a sell day, and today would be a sell short day. George Taylor's really had a very nice methodology. It's not 100% perfect, but what is? So that was the rhythm that we thought we had, and that's why we were looking for shorts today. End of the day, Kim and I were talking. We had talked about our stops, our resistance for the targets 84.75, which was a measured move. That was the 0.61 extension. 282, the gap area. You never know exactly where the gap is these days. They move the numbers around a bit. A settle was at 81.5, and we had an 82.25 gap based on like a 30-minute RTH chart. So this was our primary target getting into here, and if we could get near the 82s, make sure you're done. I like that 85, trailers below that. And then that's my belief that your skill is getting the, and this is a golf analogy, getting the ball close to the hole, and luck is when it falls in. Now we're getting late, and this is where risk and reward starts to come in. It's almost 4 o'clock within a point. So definitely appreciate guys like him who are serious traders. They don't get shaken out by a point or two. You know, a $50, $100 loss is not going to make them, go sit in the corner and cry. They understand there's a business where you're going to have some losses, and you try to keep them small and risk a point or two to make 5 or 6 or 8 or 10. And here's the tunnel vision end of day. We felt the core, the primary range was this 94 zone up to this 21, and we felt that's the battle. We come out the south side, we're going short obviously, and if we come out the top, then more than likely we're coming up to test that 4 to 5 area. We felt, because that was yesterday's demon. As it turns out, we come out in the lunchtime with no real serious rotation, no real contra the rest of the day, and that speaks to Taylor day 3 really. And if you look at the charts we had talked about earlier, you'll see now where this 240 chart has come into play, where we were overdone and we've come back into the mid-uni right here. So key idea coming in. And you'll see our general idea that this 75 is going to be a key. This low right in here. Last week when we had the pullback and 74, 75 held, those traders who tried to go short got taken to the cleaners and really just continually forced up here for a couple of days, and those were traders did not recognize the breakout at 74 to 75. So that's still support till we break that area. What can I say? Something as simple as a pivot system nailed the high, pivot 97. First primary target at S1, 87 to 86.5, and then there's 83.25, 83.5, which eventually became S2, became the low of the day. So there are a lot of times you'll find that this will work, but you can't use just this method. It's just one more juror in our system of jurors to help us make decisions. So here's the chat room. We use voice, we use chat room text, we use pictures, and we try to put context out there to explain the methodology as we go, and then obviously call the trades as we see them coming, and part of it's timing and part of it is price. So we reference the 82s, the IB, 1.5 times the IB range got us to 86.5. This was our S2 idea for the day. And then the 60 extension of the overnight range was a computed target that I felt was a valid target, 84.75. I love these 3 to 5 day patterns, the swing type trades, because you can see them coming. You know that the question is when, not if. And then as the trade starts to play out, you'd say, I know where you are going. And this was that whole gap zone that was left behind. And you can't tell until after the fact, really. You can just surmise what's happening and say, okay, yeah, this is what I think is going on. Try for the T1 at 87 target, and then continue looking for the overnight gap zones that have been left behind. So we had a bounce back target of 40 back at 91.25, and I thought that was the tight entry zone with the 92 to 93 as the stops. And realistically, small pullback until we bust those 78s. We get through that 78 zone and then tackle 75 again, and then anything can happen. But for now, that's the next support level that I'm thinking. And it is a beautiful example of filling that void. Market does not like to have a void. It just likes to convince traders that we will never come back, and that's happened a lot in the last 5 years. I mean, there's gaps still back in 900, so you just can't play that every gap gets closed. This has been an egregious 5 years, and one day it'll come back to haunt everybody, but for now the game is still on. So realistically, this 99 we'd called as our key resistance, 99.01, and then once we take out the IB low, then you're looking for these subsequent targets this afternoon, and the Taylor Day 3 really does play out. You miss by a point getting down here into closing that gap, and that's the risk-reward idea. Last but not least is this swing chart. This was the FOMC. Came back, retested the breakout, and never did let shorts off the hook. So this area is key on retesting. You can see how we bumped into this green line. Our system is predicated on not just moving averages, but levels. And realistically, one level bust, and you look to the next one. So this one held. We felt today the red box was the resistance zone, plus or minus, and then if we were able to break this red line, then we were looking for this next subsequent box. This would be the key box today. So largely this rejected this box, and a lot of time spent in here, but still have not come down and rescued these traders that were trapped at FOMC. So this box still needs to be resolved, and then see what kind of damage can be done coming back into this line right here, which I believe is significant. This will be a key. This is the pipe right here, according to Murray. And so this yellow box is a primary fighting zone. And we can't get back to these lows, obviously, until we break through this area right here. And that can't be done until, obviously, we travel down and break this level. So step by step, one step at a time, and we don't go out predicting 12 days out. We try to take it within the next day or two and see what we think is coming. All right, this is E signing off for E-mini Wizard. I hope this helps you get a better look at our style.